In this video, I want to take you through and I want to talk about the indexes once again, because the market's getting a little scary up in here where it's coming up and it's breaking into a 3-drive pattern on the fractal side on all of these markets. So we're going to look at the Dow, we're going to look at the Russell, the Qs, and the S&P. We're also going to look over and we're going to flip over to the futures version. And we're going to look at them kind of a little bit different view just over here on the futures version, because there's a lot of guys that trade these markets in the futures version. I know we do a lot of more day trading over in the futures market. And so we're going to come back over and we're going to go to the stock market first of all. And so this is the stock market version and this is the Dow. And as you can see, this market broke the previous high way back here. And that was it. And it drove up there. It held above. And as soon as it breaks a previous high, if it holds above, you're going to anticipate a continuation of the uptrend. Now, we've been watching these blue lights trail up in here. This got to break, and it's got to break those blue lights before we expect some sort of a retracement and a possibility of an uptrend. But the higher that thing gets, the more dangerous it is, because the farther it's got to fall, right? The bigger it is, the further it's got to fall. So as you come up here with this huge run, that puts the Fibonacci sweet spot way back here into this region back in here, which would correspond with this area of consolidation right in here. So this is where there's the possibility this market could come and flush back down to. It doesn't mean it can't continue to run higher. It's just statistically speaking, that's not generally what the market does, right? Generally, markets go through waves. 2 steps forward, 1 step back. 2 steps forward, 1 step back. Now, if we look at this on a fractal wave drive, there's your first fractal drive. There's the second one. It kind of, didn't really ever fractal out and didn't ever give us a little pullback right there, and then it continued to rally higher once again. So that puts that drive way up in here for that C drive. So that B drive was the big long one right there. So there's our A drive right here. And so you have to take this out of there because it never did break back, and that just becomes your B drive up here all the way up to this point here, and that becomes your C drive on the fractal wave. And then the overall longer term drive, this is our A drive coming up in here. So this is the A1, the A2, and the A3 is starting right here. Now remember, an A3, not quite so, this is what we call the dessert, right? So up in here, this is the dessert. This down in here, this is the hors d'oeuvres, and then right through here, this is our meat and potatoes. So this is our meat and potato trade right between those two drives, and that's what we anticipate. Now, if you can capture a little bit of this dessert up in here, good for you. That's a great trade if you can get that. And sometimes we miss the hors d'oeuvres too, and all we get is this meat and potatoes in the middle. And that's kind of pretty much where I caught my trend right through there. I caught that nice meat and potatoes. Of course, I did a video and said, buy right here, buy, and then sent that out. And so right up in here, I was looking to pick up some put options to protect my long positions, and those put options are getting ready to expire worthless because the market never did flush. But that's good because that means the few long positions I have left are still hanging on by the skin of their teeth right in here. And so that's what we're looking at here on the DIA. I am looking for this market to come up here and top out, and I'll show you a little bit more. I am looking for a retracement to at least come down and break those blue lights before we get another rally out of this thing. Let's jump over and look at the Russell. This is the Russell, and we can see the same 3-drive pattern in here. So you got 3 drives down here. This is drive 1, drive 2, drive 3. You see the counter trends in here. We've drawn these before in previous videos, so I'm not going to take a lot of time to talk about the previous trends, but I want to talk about what's going on right here on this current trend. So we got this drive 1, and then this is drive 2 in here, and now we're in drive 3 right now. So this is again, just to give you the metaphor, this is your hors d'oeuvres, this is your meat and potatoes, and we're in the dessert zone right now. So if this thing comes in and we look for it to break those blue lights, it needs to turn and break those blue lights. So that's your natural trend line right up in here. This is your mathematical trend line, which is those blue lights. And then, of course, you got the horizontal that comes clear back in here. But if you measure between there, you got your Fibonacci sweet spot on the retracement level where the market has a tendency to come back to. And currently it's sitting right here. Now, if it breaks and goes higher, then of course we move that Fibonacci sweet spot up. And the higher it goes, the further back the Fibonacci sweet spot ends up going, which means a bigger drop. Okay, the bigger the rally, the bigger the drop comes back into that sweet spot. So right now, if it never broke this previous high, turned around, came back, broke those blue lights, we'd expect it to come back with an ABC pattern back into this Fibonacci sweet spot in here. Right? That's what we were looking for before. We thought we were going to get a nice little head and shoulders down here. This would be your left shoulder. This is your neckline, your head, your neckline, and your little right shoulder in here. We were expecting this market to come and break and come back a little bit farther in here. and test that neckline, but it never did do it. It just kept right on going. We thought we were going to get another opportunity to add in some positions right down in here, and it never happened. But that's our little head and shoulders right there, and that market broke that neckline just like a train on rails and took off to the moon. So there we go on the Russell. So I want to talk to you about what I think is going to happen here, and we're going to talk about that right here with the Qs. So I want to show you the Qs. This is once again, we're coming in here with the 3-drive pattern. We got the 3 drives down. We got the counter trends coming in here. Counter trend, counter trend. And then what we're seeing here is this same pattern, right? Just one great big, nice big long move. So this is your A drive, and we're breaking right here. So this is the break of that A drive. And so this is now coming into the B drive. So this would be what we call a B1, all right? Now you have to be careful right here in this particular case, because this is also coming up here at the previous high and it's breaking this B1. Now, if you come down and look at the indicators, I've got a lot of indicators on here. First thing you're seeing is the stochastics indicator way up high, pulled back, and it's starting to curl along with this next rally out, right? But look at the MACD. It's on the back side. Now, it doesn't mean it can't curl and start to rally and this market can continue up that C drive. It certainly can. But look down here at the chalk and money flow. That is called divergence, okay? Divergence, meaning that we're getting higher highs in the market, but lower highs on the indicator. So we're getting some divergence in here, all right? So what that means is this market isn't as strong to the upside as we would like to see it be. Doesn't mean it can't be. It can continue to get strong and continue to rally. And what I like to do is turn on the volume, right? And take a look at the volume and see what the volume's telling us. And we're getting increasing volume, which shows that we're getting, again, some divergence, meaning that the indicator is showing down. The volume is increasing, which is showing up, and that's what we're getting. We're getting a nice uptrend. We're breaking that next blue light, which is a buy signal for the B drive, right? The B drive is our favorite drive. We love the B drive. That's the meat and potatoes of the longer-term trend. So we generally get 3 of those. So the meat and potato side is that B drive, and this is your B1 right here. So we're getting a B1. My caution in here is it comes from the Richard Wyckoff theory. So if we bring Richard Wyckoff into the mix, look at the strategy that he has laid out here for us. So you go through the accumulation stage, you go through your drive patterns, your 3 drives, drive 1, drive 2, drive 3, just like we've been seeing over here, right? Drive 1, drive 2, drive 3. Now it's not as clear here on the Qs as it was over on the other markets, but this is your 3 drive pattern. Then we get this sideways trend right up in here, and then we get a pop out the top. He calls that the spring, right? So we get the little sideways trend like that, and then we get the pop out the top. There's our pop out the top right there. So what is that? Is that going to be a Wyckoff Spring? That's my concern. That's my one concern here on this B1. And the reason is because we've already had this nice 3 drive pattern coming up on all the other markets. Not as clear again on the Qs. We didn't have any of those little pullbacks. Didn't have any of those little ABCs. But we're getting what looks like a Wyckoff Spring right there. And that thing could have the market come up and then turn and flush. That's the only thing that I'm seeing on here that's giving me pause on this next big long run. Because that's very beautiful. We've had some great economic news. I mean, if you've been watching the economic calendar every morning for the last month, just had some really good economic news come out one after the other. Some of them haven't been the greatest, but for the most part, we've had really good economic news, and the market's been very bullish and taken off. And so that's what's happening. This is good economic news is running this thing, but I'm just worried that it might be a Wyckoff Spring. And so I'm going to wait for this market to give us like 2 or 3 good rally bars, and then I want to see that first flag. So it'd be the B. This would be the B1 right here. Okay. So for me, I'm not going to go long on this thing until I get a B2. I'll go long on the B2. I'm going to wait and let the hors d'oeuvres go by. So I'm going to be very cautious on this one because I don't want this to be a Wyckoff Spring and flush on me. So I'm going to let it go. I want to get 3, 4 nice good bars, and then I want to get a flag formation. All right, so this is what I'm going to do. Now, doesn't mean this is what you have to do. I'm just telling you what I'm going to do. I'm going to wait for this thing to give me 3, 4 nice bars, okay? And I'm going to wait for a flag. And once I get that flag formation in there, I'm going to wait for it to break out the top of the flag and continue that trend. That way, I'm going to be a little more cautious, a little bit more careful up in here at these all-time new highs, that doesn't become a Wyckoff Spring and flush back down to the Fibonacci sweet spot, or at least, you know, back down into this region down in here. I want to see it prove to me that it wants to go up there and stay, give me a little bit of a consolidation, and that would be my A2, excuse me, my B2 that I would be getting into. So this is B1, and that's B2. So I'm going to take a bigger position on the B2, and I'm going to let this B1 slide by just this time. I usually don't do that because I like B1s, but because it could be a Wyckoff Spring, because we didn't, in my opinion, get a big enough pullback on this bar on some of these other markets. So if we come back and look at the S&P 500, once again, this is where I'm looking at that thing. Might be a Wyckoff Spring. Might be a little spring right in there because it didn't ever come back. It didn't ever pull back and give us that Fibonacci break, right? And so that's what I'm looking for. I want to see a little bit better break. I want to see it break those blue lights. And to do that, it's got to pull back, right? And then I want to see it go from down in here. I want to buy low, sell high. I don't want to be buying high, even though on the Qs it looks like that's what we should be doing. And it could be what we should be doing. We won't. Nobody will know, right? Until for a couple of weeks, and you know, next week we'll be able to look back and say, "Well, Lan, you were wrong." Or we could look back and say, "Well, that was the Wyckoff Spring, just like we called it, and it popped back down, hit those blue lights, and now we're going to be buyers down in this region here, which would be better than trying to be buyers up in here and have to sit through that whole thing." All right. So that's just my only concern. It might be a Wyckoff Spring, and some of the indicators are leaning that direction. But it doesn't mean the market can't just come in here and take off on that good fundamental news that we've been having. So that's the quick look at the indexes. So that's where we're at, and that's what I'm looking for. Be careful of those Wyckoff Springs. They're there to catch you. And if they can prove through, we'll jump in on the B2. All right, the B2. All right, guys, take care.